The Treasury bond market is likely underpricing structural tailwinds for both supply and inflation. This is 10-year Treasury term premia negative still. The historical average, the mean, is about 150 basis points of term premia, not spread, term premia. And then the inflation expectations are somewhere around 2.3%. That's well shy of where our secular inflation model suggests market-based and implied inflation expectations should be. Investors should expect monetary debasement because the private sector will demand higher yields to capitalize Uncle Sam. So if you look at this chart here, we show holders of marketable treasury debt by various by these major cohorts. So the Fed has been divesting for several years now. It's only 17% of the total market. The U.S. commercial banks have been divesting for several years now. It's only 15% of the total market. And foreign central banks have been investing for a decade plus, 15 years, and they're now down at 14% of the market versus a peak of 40% back in July of 2008. And so the key takeaway, the flip side of this divestment from these public sector and largely regulated institutions, is the fact that us, the private sector, the global private sector, now own 54% of the marketable treasury market. 54%, that's up from 36% at the end of 2021. And this is why we saw such a sharp repricing in bond yields over the course of 2022 amid that structural high, cyclical and structural high inflation, because the more and more of the debt is being offloaded from these historical cohorts who are less price sensitive to these new agents, these new cohorts of buyers, which are a lot more price sensitive. The buy side investors need units of return on an ex ante basis to take risk in capital markets. If there is no ex ante return, there will be no investment. There'll be no demand for those securities. So the Fed has to engineer that demand for securities, which is why we do believe there'll be persistent monetary debasement and persistent regulatory financial repression in the regulatory side to get investors back into the market, because ultimately somebody's going to have to buy these securities.